Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Friday, the 4th of November. Starting off, as usual, with the FTSE 100, which seems to be defying all the doom and gloom in the media, financial media, Bank of England, this, that, and everything else, and actually breaking to the upside. We've cleared the 50-day moving average around 71.10. We tested support at that old September resistance line, which is now obviously support, around 70.80. And the next target here, apart from the 200-day line at 73.30, would be the top of that falling trend channel from the end of last year, as high as 74.50, which I think would be quite a result. RSI in the low 60s, so allows for maybe another 10 points of RSI trace to go up towards that 74.50 level. And maybe it's too early to think of a break higher through that resistance line there from April, but if we did that, it would be quite an incredible move. I suppose the next destination would be up towards that resistance line there, heading for 8,000, but clearly we've had quite a few false dawns. Every time we rallied up towards the 75 area, there was the possibility of a break higher, but let's see if an end-of-year rally would be the trigger for a move or a breakout through that April resistance line. Upside valid while we're above the 70.80 area, which was yesterday's intraday low on the FTSE. Moving on to the DAX, which has actually appeared on Twitter as sort of a trending type of thing at the moment. Here we had yesterday's low there towards 13,000. That's actually after a gap to the downside that this market had. So we did actually have a gap down for Thursday's session. And if we close above the low of Wednesday at around 13,250, it would be a gap close buy signal, which might give this market a momentum to head towards the 200-day line there at 13,600, and the best case maybe by the end of the month up to 14,200, which is that June resistance line projection. That setup there similar to what we're seeing on the Dow at the moment, but obviously the Dow's a day behind. So let's see if yesterday's low on the Dow, 31,750, is a swing low, and then we head back towards not only 33,000, but then on a year-end basis heading towards 35,500. But clearly all of this is the best case scenario, and the macro and the fundamental areas don't look very hot at the moment. Moving on to Bitcoin, which is actually up on the day so far. Here you can see that we're still in this very unvolatile state, but we've got this, we're sort of trading in a triangle there from the middle of last month. Floor of that triangle around 20,000, resistance line there from last month around 20,800. So let's see if this market can finally break out and have some meaningful price action, at least up to last month's, or sorry, September's peak near 22,500. But interesting that we've got support there above the 50-day moving average at 19,600, and that's starting to curl up, which is normally a good sign. RSI in the upper 50s now, and that is right in the box seat in terms of being a leading indicator on a potential move to the upside. We don't normally fail once we get into the upper 50s in terms of a potential break to the upside. So let's see again if the RSI is telling the truth. On to the stocks, and Argo blockchain obviously had a horrific time over recent months. Gaps down everywhere. I think we've had 2 or 3 gaps down in the recent past. Falling trend channel there. The level to note now, whether you're a bull or a bear, is the bottom of that gap there at 10.25. That's the minimum that we want to see broken on an end-of-day close basis to give the shares a chance of filling that gap up to 15 pence. Recent support around the, what's that, 6.5 pence level. So that is your trading range. But the interesting thing here would be if we could get an end-of-day close above the top of above the floor of that gap there, around 10.25 pence from the end of last month. A bit of bullish divergence as well, which is, I suppose, the main point to note here. So we've had the much lower lows there for the end of October, beginning of November, but the RSI actually higher than it was back in the middle of last month when the shares were higher. So that bullish divergence line is at least a technical signal that the shares are due for some kind of rebound, even if that doesn't end the severe bear run in the stock. Moving on to the punter's favourite, what it was a couple of weeks ago, Barron Oil, and here the idea that we'd find gap support there at 0.16 sort of worked. Basically, we've had a bit of an overshoot down to 0.15, but 0.15, then 0.23, and then obviously 0.35 are the levels in play. And let's see if today's bounce is one that will at least take the shares back to 0.23, 0.24 over the next week or two. I think probably still be quite a few people who are caught high and dry on that stock with the spikes that we had on news of late. Interesting point here, which helps the bull argument, is that we've bounced off RSI 50, so that also ties in with the idea that 0.15, 0.16 is the near-term floor, and we will flip at least to retrace some of the best levels that seen last month. Onto a stock which has had a good update today, Caspian Sunrise. The feeling was that we were in a triangle pattern, and that support line there from April provided healthy support over the course of October, with one or two blips overshooting it. Gapped higher today through the 50-day moving average, and in fact through the 200-day line. If we can close above that late July resistance there around 3.7, we could be good for a move up to the top of the triangle there from the beginning of the year, as high as 5.5 pence, perhaps as soon as the end of this month. Stop loss difficult, but maybe 3.25 pence. The last September resistance, 3.2 pence, could do the trick, so that people don't get caught high and dry as perhaps they did with Barron Oil. Moving along to a stock which is slowly rehabilitating itself at the moment, EQTEC. We had the trend line break here for the shares sometime in the middle of last month. Let's just get closing on that. Yes, so basically middle of last month we broke that trend line around the 0.28 pence level. We made progress since there. It would be good to see an end of day close above the 50-day moving average around 0.36, which is where we are at the moment. If we can do that, then there is the prospect of a move to the top of that triangle there from July as high as 0.55, 0.57 by the end of the year. Just looking more closely there, I've got pretty good candles there over the last three sessions. Very good one on Wednesday, and today opening at the low and then actually already at the high of the day. That does suggest that we've got some decent strength building up in EQTEC at the moment. One of the stocks of the week has been, and maybe it will be the stock of the month, is Firering. Here we've had that classic pattern here. We've already had that breakout that was flagged, I think, around 8 pence at the end of last month, and breaking the initial target there around 8.8 pence, the top of that June trend channel. The good thing about the price action so far this week is that we gapped up and we found support at the top of the gap, which is what you see normally in the strongest of situations. We had a second target around 11 to 12 pence, which has been achieved obviously, and above the top of that gap there at 10.8 pence, looking for 15 pence, perhaps as soon as the end of next week. So very nice turnaround there, very nice extended U-shape on the daily chart as well. And I think 14 or 15 pence is where the shares came to market, so we're nearly back in blue territory for Firering. And just to seal the deal, an uptrend line in the RSI window still in progress, so hopefully up to 15 pence over the near term, and I think that was about the highest level the shares have ever been. On to GCM, and here you can see that we've had a little triangle break, resistance line break there from September. We did actually have a false break last month, but let's see if this one is the real deal. Bear trap below the 50-day moving average, but above the 50-day line around 5.8 pence. Finally now looking for a resistance line target there as high, it was a triangle resistance line there as high as 11 pence, perhaps by the end of the year. So looking pretty constructive there at GCM at the moment. Jangada is next, and here we've got breakout through last month's resistance at 4.7 pence. Above that, looking for 6.5 pence at that May resistance line projection. Again, another U-shaped type turnaround, so one would be expecting much more than 6.5 pence, maybe to get up to 10 pence over the next 2 to 3 months, but let's go for 6.5 at the moment. And upside valid, obviously, while we hold above recent resistance, neckline resistance around the 4.2 pence level. On to Joules, which has been rehabilitating itself, one of those rather dangerous looking situations where you sort of feel that something bad might happen at any point. But we've broken that resistance from last month around 13.75 pence. That means that we could hit the top of that falling trend channel from August as a best case scenario target up to 26 or 27 pence over the next 1 to 2 months, and maybe by the end of the year. Upside valid though, only while we're above the 50-day moving average of 12 pence. I think that would probably be the safest thing there. But the highlight here really is the break of the 50-day line and acceptance of the price action at or above that 50-day line. So that gives us a bit of bullish impetus. On to Landore, and here we've got a trend line break near the lows. We've been shuffling around the break level around the 13 pence level for a few sessions now. Above 13, looking for the 50-day moving average near 15.75. Best case scenario, I suppose, obviously a return to 20p, but let's see if the shares can consolidate a bit more. The key thing here is to get back above the old October floor at basically current levels, 14.3, 14.4 pence. On a weekly close basis today. We've got an MACD cross buy signal, and we're starting to move on that from earlier in the week. Lexington, another star situation. Really good to see the breakout here. Wonderful chart pattern. The best thing about it, I suppose, was the initial gap high, unfilled gap to the upside. Never went below the top of the gap. We had a second one, which in August, which never filled the gap either, down to 2.9 pence. And wonderful progress since. The current, well, once we broke 4, we were looking for 7 pence, and not too far from that now. If you're a fan of the shares and looking for greater glory, then if I move the chart back to the start of proceedings at the beginning of last year, you can see that a break of 7 pence could take us up to 13 or 14 pence over the following couple of months. So it looks like a very strong breakout there for Lexington, and backed by those unfilled gaps to the upside. That tends to mean that the buyers are caught short. Moving along to a stock which may be interesting from a technical perspective at the moment. We've had the pullback there on MC Mining all the way back from 38 pence. I think we had a fundraise in between, but what happened yesterday was that there was an unfilled gap to the upside, opening at the low, closing at the high, and so far we've done the same today. So very strong price action. That does suggest that we could hit 20 pence as an initial target over the next couple of weeks, and that's while we hold above the floor of the gap yesterday at 12.5, so above 12.5, looking for 20 pence on MC Mining. Covered Trackwise a week or two ago, and here we're making reasonable progress. The reason for the excitement is that V-shaped bull flag and breaking the 50-day moving average. That was around the 17 pence level. Above that, looking for the top of that rising trend channel from back in August as high as 45 pence. And that could be seen by the end of the year. So we're looking pretty healthy there. Ideally, there's no price action now below 20 pence on a sustained basis. Finishing, well, so just a couple of stocks to go now. First is Tlou, where there's been a gap higher, so we've got a Bear Trap Island reversal, gap down in September, gapped up now, and we also had a gap higher back in September as well. So it's a second gap. That does suggest that a move to 2 pence is pretty well baked in, and we could see that by the end of this month. Ideally, we don't go back below the floor of the latest gap around 1.4, so above 1.4, looking for 2.1 pence by the end of the month on Tlou. On to the last stock today, Warpaint, and here we've got a situation where after a false breakout last month, we're having another go. So the level there around the £1.50 level, above 150, looking for 180 at that December 2021 resistance line projection. Hopefully we'll see that by the end of this month. That's it from me today. More updates over the weekend.